Hey, what's up guys? Bitcoin continues to make all-time highs. In this video, we'll take a look at the updated Bitcoin stock-to-flow cross-asset model, then Michael Saylo will explain how $250 trillion ocean of capital is seeking after Bitcoin. First and foremost, Happy New Year guys! 2021 will be huge! If you take a look at the Bitcoin market, Bitcoin explodes higher. As of the time of this recording, it broke another big milestone of $31,000. Also notice how 2017 bull market run becomes smaller and smaller. Soon, this will become this. Here is an interesting fact. As of the time of this recording, Bitcoin's market cap is slightly over $580 billion. We just surpassed companies such as Berkshire Hathaway, Warren Buffett's multinational conglomerate holding company with a market cap of around $544 billion. Then we have Visa, a giant payment provider with a market cap of over $483 billion. Then we have Johnson & Johnson with a market cap of over $414 billion. Walmart with a market cap of over $407 billion. JP Morgan, MasterCard, list can go on and on. To simply put this, Bitcoin is eating the biggest tech companies in the world. The next companies on the list are TSMC, Alibaba, Tencent, Facebook, Alphabet, Amazon, Microsoft, and finally, the biggest boss of the world is Apple. After that, we are going to start eating $10 trillion of gold's market cap, then $40+ trillion of real estate market, and final step will be $130+ trillion of bond market. Well, do not get me wrong, I do not think Bitcoin will eat everything, but it will take a big bite of every large asset classes that is out there. Here we have Bitcoin stock-to-flow cross-asset model. This is what Plan B said. Bitcoin price tracks stock-to-flow model like clockwork. If BTC does follow its historic path, we will take gold in 2021 till 2024 and real estate market in 2024 till 2028. After real estate, we cannot interpolate anymore, we have to extrapolate, uncharted waters, hyper-Bitcoinization. Hyper-Bitcoinization indeed. Let's take a closer look at this chart. On the x-axis, we have stock-to-flow, and on the y-axis, we have Bitcoin's market cap. Bitcoin is represented by these red lines. Silver is gray, gold is yellow, and real estate is red. When Bitcoin stock-to-flow was at around 12 or so, the Bitcoin's market cap was fluctuating at around $8 billion. Then when Bitcoin halving came around, BTC rewards got cut in half and the stock-to-flow increased twice respectively, which means when stock-to-flow was at around 25, then Bitcoin price was fluctuating at around $100 billion. Now Bitcoin stock-to-flow is over 50, it's very similar to gold stock-to-flow, and the Bitcoin's current market cap is over $500 billion. But this model suggests that Bitcoin can reach $10 trillion of the market capitalization within this Bitcoin halving cycle, which means by 2024. And over say gold. Next up would be real estate. According to this model, real estate stock-to-flow is at around 90, which means inflationary supply of the new real estate coming into the market is less than 1% annually. After 2024, Bitcoin inflationary supply will be less than 1% as well, and the stock-to-flow will be over 100, which means it's higher than real estate. That being said, Bitcoin price is not only going to the moon, it's going to another galaxy. Another bullish fact. Grayscale Bitcoin Trust under the symbol GBTC just in December bought 72,950 Bitcoin, and during that month only 28,112 Bitcoin was minted. I'm not even talking about PayPal, Square, and other financial institutions who buying up Bitcoin like crazy. Demand for Bitcoin is so high, nothing comes close. We already know that Grayscale owns around 3% of total Bitcoin in circulation. Soon, GBTC might have more Bitcoin than Satoshi Nakamoto himself, who owns around 1 million Bitcoin. That is going to be slightly more than 5% of total Bitcoin in circulation. Soon, he might be the richest man on earth if the Bitcoin continues to grow in that rate. He might be richer than Jeff Bezos and Elon Musk. Speaking of concentration, around 2% of total Bitcoin wallets own 95% of all Bitcoin in circulation. It also means that another 98% of Bitcoin wallets owns only 5% of all Bitcoins in circulation. That is crazy. Just 2 days ago, Michael Saylo had a very unpleasant interview with Kid McCall. In this second, I will explain why it was unpleasant, but first, let's take a look at the clip.
But when we're talking about a software network that's going to change the life of 1 billion people and dematerialize $1 trillion of energy, the only question is that one the winner? And Bitcoin is the winner of the crypto wars. It defeated 6,500 different crypto competitors, and it has risen out of those wars to be the dominant crypto asset network, just like Amazon defeated every retailer in cyberspace, just like Apple defeated everybody in mobile space, just like Facebook defeated everybody in social space. You have a chance to buy and own the winner and just wait for the rest of the world to recognize it. And, you tell me, is there any winning trade of Facebook or Apple or Google or Amazon stock in the year 2012 that's better than the trade of buying it? But what we're talking about here is a monetary network never before in the history of the world created at the beginning of the S curve. If you buy at the beginning of the S curve and you're right, then you're going to have an extraordinary return as an investor. If you buy at the end of the S curve, maybe you'll hold some value. Look, let me ask you one more question. Say you actually wanted to take $1 million and you wanted to put it in an investment and give it to your daughter or your granddaughter in 30 years. How would you do that? Like, how do you pass down a material amount of money to your granddaughter or your daughter in 30 years? Because I can't do it with real estate in Florida. They tax it away from you in 30 years. I can't do it with any stock because I don't know the stock won't get destroyed in 30 years. I can't do it with gold because it's going to be cut in half and maybe seized by someone in 30 years. I can't do it with a bond and I can't do it with currency. With Bitcoin, because you can't make any more of it, you've got this pure piece of financial energy. You could buy it, you could hold it for no carry cost, and you would be able to hand it to someone in 30 years. So the magic of this is, for the first time in human history, we figured out how to send money forward in time 10,000 days without losing it. It's a magical thing. By the way, if I give you a battery, if you put $1 million of electricity in a battery, it bleeds 2% a month. You lose 24% of your energy in a year. You can't do it with a battery. The gold battery bleeds 2 to 3% a year. We've got a battery that doesn't bleed energy. It's a magical achievement. Nobody in the history of economics ever created a closed monetary system that respects the laws of thermodynamics, and it doesn't bleed off monetary energy into the atmosphere. I mean, how is that not something that you would want to put some amount of monetary energy into to protect for the future? Now, what happens to all these wonderful models if 10 billionaires decide to buy $1 billion of Bitcoin each and announce, we bought it, we're not ashamed of it, we're going to buy more? All your models are destroyed, completely devastated. Bitcoin goes to the moon, because what really matters is, with Facebook, does it work? Do 1 billion people use it? With Apple, do they buy it? With Google, do they use it? With Bitcoin, will they use it? All the near-term trading models, they'll work for 90 days, 30 days, whatever, as long as everybody else in your trading universe sees the world you see it. But over a decade, over 20 years, over 30 years, the laws of thermodynamics are going to kick into place. And it's pretty obvious Bitcoin is a better long-term asset than gold or corn futures or soybeans or any company run by a CEO, no matter how august and intelligent they are. They're all just merely mortal. And Bitcoin is something better than that.
I know nothing about long-term, about anything, including my own company, my own family, my life. I'm just going to get up every morning and do the best I can to understand it and put a risk management wrap around this. If it's truly an asset allocation that one should hold over the period that you're talking about, like forever, there should be some risk management around this thing, should there not? Or it's just because buy and hold is not, Michael, that's not something, that companies and executives have been trying to sell me their stock for 20 years have been telling me to do, and I'm just not willing to buy into that.
It seems to me like every billionaire on the planet got there by buying and holding something, Keith. I mean, tell that to Rupert Murdoch or Warren Buffett or Jeff Bezos or Sergey Brin or Mark Zuckerberg.
Yeah, but what does that mean? Like not everybody's going to be a bit like, I'm not a billionaire, but I'm certainly not worth $1 million. I did that. You're talking to a guy that understands. I built my company 13 years ago and I bought and hold it. I get it. I totally get it. But I would not.
So why would you tell the average person that they ought to trade everything 1,000x?
I didn't say that.
It's a lot of work. It's very complicated.
I actually didn't say that. I said that.
The tax code is very hostile to that.
I didn't say that at all. Actually, what I said was, if you believe in Bitcoin like I do, I bought the living daylights out of that in April and May. If you believe in it, why don't you understand it so that you don't buy it at a bad price? There's nothing.
If you believed in it, you wouldn't sell it.
Yeah, that's fine. I mean, I don't have to believe in it the way that you do, but I'm trying to say that there is a better way to buy it. And in a level of awareness on that, I still haven't heard why economic gravity does not affect Bitcoin.
Okay, so my point here is that if you're a professional trader and that's what you do, or if you spend 10, 20, 30 hours a week and you devote the effort to it, and if you've got all the offsetting positions and you can manage the tax issue and you've got all the platforms, then maybe you can do something there. The average person doesn't have the time, the wherewithal to do it, and the tax code is hostile to moving in and out of positions. I mean, one of the most intelligent things you can do is just buy something and wait for 10, 20, 30 years, because all your gains accrue tax deferred. And so telling the average person, like I can't go tell my father, I want you to go and study up 20 hours a week on trading strategies and take 50 different offsetting positions every year. What I can do is say, Dad, buy a bar of gold, put it under your mattress. And that's what he would have done 30 years ago. Now we have a better idea. You can buy a bar of Bitcoin and you can put it in your hard self-custody wallet and you'll have it and no one can take it away from you. It's a investment strategy someone can execute.
Yeah, 100%. I agree with that 100%. I mean, what I'm trying to articulate is the very basic concept of a drawdown of your capital. So again, you can buy it at 19,000, or you can buy it at a much lower price when Quad 4 hits. And I mean a much lower price. We're talking about significant drawdowns. It's not like you can just everyone can pile into it at today's price and has that duration, Michael. I mean, especially if we're talking about the billionaire who's going to be dead in like 10 years, he might think about, okay, maybe this is something I should risk manage.
Well, there's the dollar cost averaging observation that if you continually sweep your excess cash flows into an investment portfolio that's going to be a hedge against true asset inflation, then that's a wise and rational strategy for a mere mortal. Yeah. I don't think it's for a company or for an individual. I think sweeping your excess cash flows into a basket of treasury assets that are going to appreciate in price as the monetary system expands is rational. And if you try to time that, maybe Bitcoin is trading at 19,000, so you don't do it, so you wait for it to come back. And then maybe it never comes back and it goes to 100,000, and then you lose 5x your money, and your money gets inflated away to nothing because you were trying to be cute.
Michael Saylo explains why Bitcoin is the best asset to hold and why long-term investing is so much better than short-term speculation. This Keith just doesn't get it. He's so pathetic. He claims that according to his bullshit models, when Quad 4 hits, this is the time when Bitcoin will be massively cheap. So buy and hold is not a reliable approach. Of course, Michael Saylo had to give him a lesson how billionaires were actually made. It's just by holding their positions and having a long-term view. Warren Buffett, Jeff Bezos, Elon Musk, Mark Zuckerberg, list can go on and on, but this pathetic guy just does not understand.
I know nothing about long-term, about anything. Because buy and hold is not, Michael, that's something that companies and executives have been trying to sell me their stock for 20 years have been telling me to do, and I'm just not willing to buy into that.
Hold on, you say now you understand?
I did that. You're talking to a guy that understands. I built my company 13 years ago and I bought and hold it. I get it.
Bought and hold it. I get it. Bought and hold it. I get it.
So which lie is it? Is it the first lie or is it the second lie? It just makes me sad that people like this actually exist on this planet, misleading an average person by giving them a wrong advice that you should trade Bitcoin rather than buying and holding. He is either intentionally misinforming his audience or he's just an idiot, and I think that's the second one. Here's the thing, guys, not everyone can be a successful investor. Even if you receive an MBA from Harvard or Columbia University, it does not mean shit. Successful investors come with two parts. First part, there is something has to be in you, something like a talent in professional athlete. And the second part is education. If you do not have this within you, no matter how many books you read, you will fail. And this Keith guy just doesn't understand. The same like Peter Schiff doesn't get it. At least Peter Schiff has critical ideas and decent argumentation against Bitcoin. But this guy is a total idiot. I got very agitated to listen to his bullshit. So please focus on long-term investing and do not try to be cute. Enough of this mophead. Now let's take a look at this clip where Michael Saylo describes how Bitcoin will eat the world.
There's a $250 trillion ocean of assets. They're all looking for the ideal store of value right now. I believe that the obvious question is, how do we explain to people that Bitcoin is digital gold, it's a better gold than gold, and it's a better store of value than big tech? And we can show them with numbers and we can show them with narratives. But as that happens, then a lot of that monetary energy is going to flow from the asset ocean into the crypto pond. And everybody that makes that transition is going to benefit. So it's a chance to do good for the world.
Yeah.
That's why I'm on your show. I think if you wanted to make all of your subscribers, very, very successful, I think educate them on the trade-offs between Bitcoin and those other assets, because there's a vacuum there. And I don't think anybody is really printing those charts. I don't see them. If I saw them, I'd be tweeting them.
According to Michael Saylo, there are around $250 trillion ocean of assets looking for ideal store of value right now. If Bitcoin catches at least 10% of that ocean of assets, that would be $25 trillion of market capitalization. And that would mean around $1.5 million a coin. I think 10% is actually underestimation. Let me know what do you guys think about that Keith mophead and his pathetic Bitcoin strategy. Very curious what you have to say. Leave your thoughts in the comment section below, smash that like button and subscribe for more videos.